Good day, students. I will be doing the extra question paper or extra question on partnership. Example of partnership equity statement. We are given opening balances on the 1st of January in the year 2003. We are given capital for partner A and capital of 20,000 rands for partner B. We are given their current accounts, and this current account has a credit balance and this current account has a debit balance, because this current account has a positive opening balance while partner B has a positive opening current account with a negative current account with 8,000. That indicates that this current account is a debit opening balance current account. We are given drawings of 3,000 for partner A and 4,000 for partner B. Remember, drawings, they do not have an opening balance, although they are recorded under the heading opening balance, but drawings are not the opening balances. We are given a general reserve opening balance of 45,000 rands. Net profit for the year as per the income statement amounts to 142,000 rands. Salary are given to be 5,000 for partner A and 4,000 for partner B per month. And we are told that the salaries for the last month has not yet been paid. That means salary of 5,000 for partner A and 4,000 for partner B are still accrued. Interest on capital account and current account is calculated at 10% per annum, and the interest on drawings is shown as 600 and 750 for partner A and B respectively. Partner B is to receive a bonus of 6,000 rands per annum, and the profit and losses are shared in the ratio of 3:2. And we are also instructed or required to transfer the profit to the general reserve account. And we are required to prepare the statement of changes in equity as at 31st of December in the year 2003. So now, before I do the statement, I will prefer that I must start with the appropriation of profit and loss. So my number one will be the appropriation of profit and loss. Then after I've done appropriation of profit and loss, I will do the current account for partner A and partner B. Current account for partner A plus current account for partner B, and this requirement will be number 3. So now, starting with the appropriation account of profit and loss, we always start with the opening profit, and the opening profit is 142,000 rands, and this 142,000 rands will be recorded on the credit side of the appropriation account as a net profit, because it is given to be a net profit of 142,000 rands. Then after we were told that the salaries amounted to 5,000 and 4,000 for partner A and B respectively, then we record that under current account, double enter. CA represent current account, then we write the name of the partner, partner A, then the description was a salary, and salary, if we say a total of 5,000 of a salary times by 12, that should give us 60,000 rands. So now we say 5,000 times by 12, that will be a total salary of 60,000 rands for partner A. Just to show the workings, partner A, it will be 5,000 times by 12, that will be a salary of 60,000 rands. So that salary of 60,000 rands will be recorded on the debit side of the appropriation account, and the salary for partner B will be an amount of 4,000 rands. And if we say 4,000 rands times by 12, that should give us an amount of 48,000 rands. So the salary for partner B will be 48,000 rands for the full year. Then after we record the both salaries on the debit side of the appropriation account. For partner A is 60,000 rands, and for partner B it is 48,000 rands. Then we go to the second additional information where we are told that the interest on capital account and current account is calculated at 10% per annum. So now it means the interest on the current account and capital account is calculated at 10% of the opening balances. Then we say current account, partner A. Then we say interest on capital, and the interest on capital will be 10% of the capital for partner A, and the capital of partner A is an amount of 30,000 rands. And if we say 30,000 rands times by 10%, that should give us 3,000 rands. And if we say here 20,000 rands times by 10%, that should give us interest on the capital of 2,000 for partner B. So for partner A, interest on capital is 3,000, and for partner B, the interest on capital is 2,000 rands. Remember to write current account, the name of the partner, and the entry, which is in this case interest on capital. Then after we record the interest on current account, and we say current account partner A, current account partner A, interest on current account. CA represent current account. So now the current account for partner A was a debit current account or credit current account of 10,000. So if we say times by 10%, that will give us an amount of 1,000 rands. And the interest on that capital is interest expense of a for a closed for this partnership. So now partnership will be paying interest on this credit current account. It means by the end of last year, the partnership was owing the partner an amount of 10,000 rands. So the current account for partner B is a debit current account. Therefore now it means the interest on this current account will be calculated and recorded on the credit side of the appropriation account, because this is income that the closed corporation will be receiving because the partner owes the partnership. So now it will be recorded on the credit side. Current account, name of the partner is partner B. The description is interest on current account of 800 rands. Interest on current account of 800 rands. Then after we record the amount of the drawings, we are told that the interest on drawings is to be shown as 600 and 750 rands. So I have to record that on the credit side, current account in partner A, current account partner A, and we also have partner B, interest on drawings. Remember, drawings is the money that has been withdrawn by the partners. So now it means partners will have to pay the interest to a partnership. So hence the interest on drawings is the income to the partnership. So now that means the 600 and the 750 will be recorded as income, 600 and 750. Remember, appropriation account increase on this side and it decrease on this side. Whenever there is income that the partnership has earned, this will be recorded on the credit side. And whenever there is expense that the partnership has incurred, this will be recorded on the debit side. That means reducing the profit of the partnership. The next one is to record the bonus that is to be received by partner B, and we know that a bonus is an expense. Therefore now that bonus must be recorded on the debit side, and we are told that it's a bonus of 6,000 rands, current account partner B, and this is a bonus. So now just to take note of the fact that on this side we record expenses and on this side we record incomes. Just take a note of that. We record incomes. So now we go and check for another entry. Is the profit sharing ratio of 3:2, and the last one we are to transfer 15,000 to the general reserve. So now when we are transferring money, we are taking it from the credit side of the appropriation and we are recording that to the debit side, which is the amount that will be reserved. That means an amount that will not be shared at the end of the year. So that will be general reserve. Is the amount that partners decide to reserve, general reserve. So the general reserve will be a debit all the time whenever an amount is transferred to general reserve. Then from here we can share the profit among the partners according to the ratio of the partnership agreement. So now we have to take the total of the bigger side, and the total of the bigger side is the credit side, and the credit side is 144,000 rands, 150, 144,150. And if you say total of the credit side minus total of the debit side, that should give you an amount of 9,150. If you say total credit minus total debit, that should give us a profit being equal to 9,150. So now the share of A, we are doing the profit sharing now. The profit share of partner A, profit share of partner A, we are sharing the profit. Profit share for partner A will be out of 9,150 times by 3/5. Remember, we're told that the ratio to share the profit is 3:5. So if that is the ratio, therefore now we must share that in the ratio as it is given, as you can see there. So now we are sharing this profit. We say times by 3/5 and we get the share of partner A is 5,490. And the share of partner B from the profit will be the amount of the profit 1,950 times by 2/3, and that should give us an amount of 3,660. And if you add the two amounts, make sure that they give you the same 9,150 rands. So now we can record that straight in the appropriation account, and we say current account, partner A, profit share 5,490 and 3,660 is the profit share for partner B, current account. Then after you are done with this, make sure that your debit is equal to your credit. And from here now I will be doing the current account for partner A, and the current account for partner A is having or had a credit balance. That means the partnership by the end of last year had an amount of 10,000 that was due to the partner. Then after we record the salary that comes from the appropriation account, salary for this partner is 60,000 rands. However, in this case, we don't record the full 60,000 rands. Although in the appropriation the salary is 60,000 rands, we don't record the full amount. Why are we not recording the full amount? Is because we are told that of the salaries is only a salary for 1 month that was still accrued. We were told that the salaries for the last month has not yet been paid. It means from January until November salaries were paid. Therefore now in the current account we only have to record the amount of the salary that is still accrued. That means the amount that is accrued or not yet paid by the end of the year for partner A is only a salary of 5,000 rands, because the rest of the salaries for the 11 month was already paid. Then after we record interest on capital, and the interest on capital is recorded to be 3,000 rands for partner A. There is the interest on capital 3,000, and the interest on current account is 1,000. The interest on current account is 1,000 for partner A. Then for partner B we have, are we still doing partner A? For partner A we have a profit share again. Profit share, that is on the credit side of the appropriation account. We record the profit share of 5,490. There is 5,490. Then on the credit side there was interest on drawings of partner A. Then we record that on the debit side. Interest on drawings, and the interest on drawings for partner A is an amount of 600. Then after we record the amount of drawings, remember when it comes to partnership, the amount of drawings is closed off to current account by the end of the year. The amount of drawings for partner A is given to be 3,000 rands. So now we record that on the debit side because it is closed off to current account. Then now from here we can totalize the current account. We say 10,000 plus the 5,000 plus the 3,000 plus the 1,000 plus the share of profit. That should give us a total on the credit side of partner A as 24,490 rands. That is the total of the bigger side, 24,490 rands. Then after we have our balance, and our balance carried down will give us an amount of 20,890. That is the balance carried down, and that will be a balance brought down of 20,890 rands. That is the balance brought down. So now from now we can do the next ledger account for the second partner, which is partner B. And we know that the current account for partner B had a debit balance. Remember, a debit balance, if it's not stated, it will be written as a negative. If you see those brackets, that shows that this balance had, this ledger account will have a debit balance of 800. Then after, as usual, we record the interest, or starting first with the salary. The salary for this partner will be an amount of 4,000. Remember, we don't record the full 48,000 rands because salary for 11 months was already paid. So now we only have to record what is accrued or not yet paid in the current account. Then after we record the interest on capital, and the interest on capital for this partner is given to be an amount of 2,000. Remember, we said 20,000 rands times by 10%. We said this times by 10%, and it gave us 2,000 rands. Then after, we have to record the interest on interest on capital 2,000. Then after, remember, we've recorded again for partner B the bonus of 2,000 rands because partner B was entitled to a bonus of 2,000 rands by the end of the year. So now they also bonus of to receive a bonus of 6,000 rands, a bonus of 6,000. Okay, bonus is a bonus of 6,000 rands. There is a bonus of 6,000 rands. So now we have to record that bonus on the credit side of the ledger account for the current account of partner B. So we record that as a bonus on the credit side, a bonus of 6,000 rands. Then after we check for another entry, we have accounted for this one. Let me just tick all of them. We have accounted for the salary, we have accounted for the interest on the current account, we have accounted for the bonus. We must still account for the share of profit. So now we must record the share of profit of 3,660, which is profit share, and the profit share is 3,660. And there was interest on the current account of this partner, and that interest on current account is 800 on the credit side. 800 on the credit side. Therefore, now for every credit there must be a debit entry. So that means we must record that interest on current account on the debit side as 800. Just correct that 8,000. Then we have interest on current account 800. Then after we also have interest on drawings. Interest on drawings is given to be 750 rands. 750 is the interest on drawings for partner B. Then after we record the amount of drawings, remember drawings are closed off to current account at the end of the year. That will be an amount of 4,000 rands. So we have recorded 8,000, we have recorded 800, 750, and the 4,000. On the credit side, we have 6,000, we have 2,000, we have an amount of 4,000 rands, and we have an amount of 3,660. We have recorded all the entries that were necessary in this ledger account. So we can balance this ledger account by striking the total side, and the bigger side will be the credit side, and the credit side has a total of 15,660 rands. 15,660 rands. Then after we'll have a balance carry down of 2,110. 2,110 will become a balance brought down. So there we have our balance brought down 2,110. And from here now we can immediately record all this information in the statement of changes in equity, which was the requirement of the question. So now I'm doing this requirement, the statement of changes in equity for this partnership. So now the statement of changes in equity always look like this, and you'll have the name of the partner, which is partner A, partner B, partner A, and partner B. And the opening balance is on the 1st of the first month 2003. And the opening capital was 30,000 rands, and opening capital was 20,000 rands. Current account opening balance was given to be 10,000 rands. These are just the opening balances, and this was a net debit balance. Make sure that when it's a debit balance, you record the 8,000 as negative. This 8,000, record it as negative. General reserve is given to be 45,000 rands, and the total of the three will be 97,000 rands. Then after we record the net profit, The net profit was given to be 142,000 rands, and it goes straight to the appropriation account and under the total column. Then after we had an amount of salaries. Now we must record salaries that were earned first. Salaries that were earned, that means salaries that were supposed to be received by or supposed to be paid by the partnership, and the total of these salaries will be 108,000 rands. Remember, this amount of 108,000 rands is the sum of the two total salaries, being 60,000 rands plus 48,000 rands. These two salaries that I'm talking about. Just change the marker. The sum of these two will give you 108,000 rands. We add the total salaries that were supposed to be paid, and we record that as negative under the appropriation account, and under the total column we have 108,000 rands. Then after we record the second salaries that were accrued at the end of the year. Remember, at the end of the year there's a portion of the salary that was not yet paid, and the salary for the last month that was not paid was 5,000 and 4,000 respectively for both partners. So we take that sum, it will be under the total, and that will be an amount of 9,000 rands. If you remember, in the ledger account for the current account, we only recorded what was due to or accrued to the partners. We only recorded the salary for partner A as 5,000 rands. So now we still stick to that. Same as the second current account, we recorded only the salary that was still accrued of 4,000 rands because of the statement that told us that salaries for the last month are still accrued. Because of the statement that said salaries for the last month have not yet been paid. So now we only record in the current account expenses that are not yet paid. So now when an expense gets to be paid, we don't record that again because it was already recorded and taken into account. Then after we continue with our statement, then we have covered the net profit, we have covered the salaries. Let us go to the interest on capital. The interest on capital is calculated to be 3,000. We have interest on capital. Interest on capital. Interest on capital is 3,000 and 2,000 rands, and that will go straight to the appropriation account as a negative 5,000 rands. Why must this be negative? Is because an interest on the capital is an expense that will be paid by the partnership. So the partnership will pay that expense. So hence it reduces the profit of the partnership. And remember, appropriation ledger account, we have done that and we have recorded on the debit side those interests. Remember, this is an expense. Expenses are recorded on the debit side, and remember, expenses are reducing the incomes that are on the credit side. So now it means for us to show that an amount is an expense of a partnership, therefore now that must be negative under the appropriation account. That therefore means to tell you that all the expenses that are on the debit side must be recorded as negative in the appropriation column in the statement of changes in equity. And those that are on the credit side, entries that are here on the credit side, must be recorded as a positive in the statement of changes in equity. However, there are also exceptions with that, more especially when it comes to the current account having different opening balances, because we have to consider the net of the two amounts. However, you will see that Then after we do the interest on current account, and the interest on current account is an amount of 1000 rands for partner A and 800 for partner B. Remember, because the opening balance was a negative opening balance or a debit balance for current account of partner B, therefore the interest on that current account must be negative. So now that means under the appropriation account we must only record an amount of 200 as negative. Why are we recording only 200? It's because if the partnership is supposed to pay 1000 and at the same time the partnership is supposed to receive 800, it means the net of the two will be a net payment by a partnership, and that net payment will be an amount of 200 rands. So that is why we only take into consideration the 200 rands. So interest on capital is taken into account, interest on current account has been taken into account. Then now we have to check for another entry to consider. This has been captured, this has been captured, this has been captured. We have to record the interest on drawings. Interest on drawings. Interest on drawings. Interest on drawings. And the interest on drawings will be negative in the current account for partners. Remember, we recorded this on the debit side of the current account for each partner, and the interest on drawings was 600 and 750. Remember, this is income to the partnership. 1350 is the total. Therefore, because the partners are paying the interest and the partnership is receiving the interest, therefore now that will be recorded as a positive amount in the appropriation column. Hence it was recorded as income in the appropriation account. On the credit side, there we had interest on drawings and the interest on drawings. So there is definitely a link between the two. Then after we continue recording the next entry, and the next entry will be a bonus. We have done the drawings now, then we must do the bonus of 6000, and the bonus was only due to partner B. So now we record that bonus as a plus in the current account of partner B. We record the bonus, and the bonus was only for partner B, an amount of 6000 rands. That amount is taken from the profit, so all the expenses reduces the appropriation account. Then after we have accounted for that, we check for the next one. The next one is the transfer of 15,000 to the general reserve. Then after we have to consider the profit share, the transfer of profit and loss to the general reserve. So now we are accounted for that. We are transfer to general reserve. And the amount that we are transferring to the general reserve is 15,000 rands, and that amount is taken from the profit. Then we had nothing at the end, negative 15,000 rands in the appropriation column, and positive under the general reserve column. So it's a plus in the general reserve, it's a negative in the appropriation. Then after we have the last portion, the last section, which is the drawings. And the drawings were recorded to be 3,000 rands and 4,000 rands for partner A and B respectively, and that does not affect any other entry. It goes straight under the total as 7,000 rands. as 7,000 rands. That will be 7,000 rands. Then the last part is the profit share, which is the share of profit. Profit share for partner A was 5,490, and the profit share for partner B, we recorded that to be 3,660, and that will be the total of 9,150 in the appropriation account column. Now remember, if you were not required to do this ledger account, you will still be able to calculate the profit share in the statement, because in this case we just said total credit side minus debit side. That gave us an amount of 91,000 or 9,150. So this is what we did, and we calculated this. So now in this case, if we're not required to do this ledger account, we still allocate the profit accurately. Then you have to say 142,000 rands of the net profit. You say minus 108,000 rands plus 5,000 rands minus 200 rands plus 1,350 rands, then minus 6,000 rands minus 15,000 rands, and after you have accounted for that, that should give you the same 9,150. And make sure that you record this as a negative, because at the end of the year, appropriation column must not have any balance. Similarly to the ledger account of appropriation, here there is no balance. The whole profit that we gained at the end of the year, it was shared among the partners. And if you say total debit side and total credit side, you get the same 144,150 after you have shared the profit among the partners of a partnership. So now we can totalize all of our totals. Then our total column will be 133,000 rands. Our general reserve will be 60,000 rands, and our current account for partner B, make sure that it gives you the same 2,110, the same 2,110 that we did in the ledger account. We got 2,110 as a balance that was brought down and carried down. And for partner B, the current account total is 20,890, and there was no capital contributed by any of the partners, so we just record those one as they are. Make sure that when you calculate across, you get 133,000 rands, and also when you calculate this direction horizontal, you must get the same 133,000 rands. With that, I am done with this question. Thank you, guys.